What's up everyone? Welcome to Bullflow Academy. My name is 7-Star Mike and this video is all about unusual options flow. I'm going to cover what unusual options flow is all about, show you some of the results of using this strategy, explain what information the scanner is showing us, and most importantly, how to find these high probability trades. Now at the end of this, I'm even going to give you an easy to follow checklist to help you find these high probability trades on your own. Let's start with a little bit about me so you have an idea of why I feel I'm even qualified to teach this class. I've been a full-time trader since 2016. For 6 years, I was the options flow educator for one of the bigger options flow companies out there, responsible for teaching options flow to 6,000 people. Then for 2 years, I was trading on my own again, free from the responsibilities of mentoring others. Now I realize I did miss the teaching and the community aspect of trading. So just this year, I joined the Bullflow team. I'm the educator and community leader for the team. So once again, I'm responsible for making sure traders using options flow are well versed in how it works and what to look for. Now, on the bottom of the screen, those are all the ways you can get in touch with me. If you have any questions about what you see here or anything you may have heard or don't quite understand about options flow, now, whether you're a Bullflow member or not, you can still reach out to me and I will answer all of your questions about options flow. Now, does options flow as a strategy even work? Let's start there. If you look at the screen here, so I post flow of interest in our Discord rooms in two categories, weekly flow and swing flow. And I went back to the start of September and checked the high points of the first 11 contracts posted in the swing flow category that hadn't expired yet. The results are posted on the right there. Now, only 1 out of the 11 trades stood no chance of making a profit, and the others all gave an opportunity to exit for nice profits. And those are pretty good stats. So yes, understanding options flow is a profitable strategy. Now, there's a few things to note here. The first is that to get results like these, you need to understand what the right flow to follow is. Not all flow is created the same. There's good flow, there's bad flow. A lot of options flow is just pure garbage. And a lot of people that struggle with this as a strategy don't understand the right flow to follow. So that's the biggest mistake, is that they're just not following quality flow. But there's a specific pattern that I look for that has a high probability of becoming a profitable trade. Now, the second thing to note is that while these are the peak prices of the contracts after I called them out, that doesn't mean you would exit for these percentage gains. You would have had to sell at their peak, which just isn't realistic. But if a trade has percent gains like these, you should be able to manage the positions to lock in some profits. So even without exiting for maximum performance gains, you can still find a lot of trades that will deliver profits, making following options flow a valuable part of your options trading strategy. Now, in just this list alone, 4 out of the 11 trades made well over 100% gains. There's CVI with 323%. There's PLTR with 205%. There's CCJ with 904% max gains. And GLW right there hit 128% gains. So I would definitely say unusual options flow trading does work. Now here's a more recent example. On Friday, we saw flow come in for the JetBlue. These were the 10, 25, $8 calls. And Will posted this in the room for everyone to check out. So I took a look at the flow, I liked what I saw, and I was willing to take on some risk to open a position following this trader. So down here, I alerted to the room that I was following the flow to let everyone know that I liked the flow, I believed in it, and I was willing to back that belief with my own account's money. Now in just over an hour, it had reached 100% gain. So at that point, I closed it out and it already reached my first target on the charts, so I was comfortable with 100% gain. Now over here, Will got a late entry, but he was still able to grab a 35% gain. That's awesome for a chase entry. And then Kiwi Chick followed as well. She was able to grab an 82% gain. So there's a recent example of the team working together to make sure everyone in the group understands and can see quality flow in real time and be able to profit together on it. Now, one thing I want to make clear before we get into the actual scanner that I'm showing is that this information will work for any options flow scanner you might be using. The specific one I'm using is dialed into my exact specs, so it's showing me exactly what I want to see and exactly how I want to see it. So if you're using a different scanner, you might not see as much information and it might be displayed a little bit differently. But the idea behind Unusual Options Flow is going to be the same. So regardless of what scanner you're using, the checklist and the concept of finding high probability flow is going to be the same as what I'm showing you here. Now, if you don't have an Unusual Options Flow scanner, or if you'd like to try the one I'm using, as a special treat for watching this class, you can visit bullflow.io and at checkout use code bullflow25 and you'll get a free week and 25% off your first month to try out this specific scanner. Now let's get back to learning about Unusual Options Flow. So now that you've seen some examples of the strategy working, let's take a look at the scanner. And I want to show you guys how we can see and analyze this data. First, a note of caution about options scanners. Let's just go ahead and read the slide here. It says, welcome to Unusual Options Flow. This is an exciting trading strategy because it essentially allows us to trade just like the hedge funds. In fact, not just like them, but following their exact same trades. A common problem, though, is that people are so excited to use this new tool that they rush into trades they see on it without even understanding what they're looking at. And the next portion I haven't read because this is very important. In order to be successful as an options flow trader, it is vital that you put in some time and effort into understanding exactly what you're looking at. Now, if you've never played chess before, you won't be competitive enough to beat the pros in 6 months. It takes years of studying, playing, refining your strategy, and the same goes for trading. But for some reason, probably because of what you see on social media, a lot of people think they can fund an account and they'll be a millionaire in 3 months. And it just doesn't work like that. You really need to understand the details and nuances of trading options and options flow specifically to make this work. Now, the good news is that since you're hanging out here taking this class, that's the first step in showing your dedication to learning. So let's get into the actual scanner. What does an options scanner do? It's important to note what it does and what it doesn't do. So let's start with what it does do. First, it's going to scan all the exchanges. And what it's doing is it's designed to go through the exchanges looking for all of these options orders that are being filled. Next, it's going to sort through those trades. So we have an algorithm that removes the trades that we deem to be insignificant as determined by countless hours of research. And then 3, it's going to show us what's actually happening in the options market. So what makes it to the screen is an overview of what's happening, and not all of these trades are actionable. So that's very important to understand. In fact, most of them are not actionable. So our job is to dive into the data and pick the trades that have a higher probability of generating a profit. So what does the scanner not do? Well, it doesn't tell us what to trade. It doesn't tell us whether a ticker is going to go up or down. It doesn't tell us whether a company will beat or miss on earnings. It doesn't tell us anything except these are the trades that people are placing. So it's literally just showing us the trades that are being executed on the various exchanges. And it's up to us as traders to analyze that data that's displayed and then make a determination as to whether it's a big money trader that we might want to follow with our own accounts. Now, this is all real-time scanning. There's 0 delay. So if you look at the picture to the right there, you can see that all of those trades happened within 1 second of the market opening. And that's also when they showed up on the scanner. So there's 0 delay between these trades being executed and showing up on the scanner. And that's important because if we're following a trade from a hedge fund, we want to know exactly when they open their position. Not a day later, not an hour later, not 15 minutes later, but exactly when they open their position. So some people will enter a flow trade the second they spot it, and some will wait for a spot on the chart that gives them an entry that they like. Now, whatever your preferred strategy is, it's still important to see real-time data because you can also spot when the big money traders exit their positions. So having this real-time information really gives us a look into what's happening in the options market minute by minute, and actually literally even second by second. So let's take a look at the actual setup of the scanner. Now, regardless of what scanner you use, this info should be similar. The biggest differences are how well the algos are programmed and how much of the scanner is really set to show you. So I had this one dialed in to show us exactly what we want to see and in the manner that we want to see it from the perspective of a full-time options trader. So you might not see as much data if you use another scanner, but again, the overall idea towards finding high probability trades should be similar. Now, to understand the data, let's go to the actual scanner and check out what it's showing us. Okay, so this is the main option screen here for Bullflow. Now, I'm going to go over what we're showing here, and I'm going to go over some filters real quick. Then I'm going to give you a little more information as far as what it's showing us. So first we have the time. That's the real-time data of when these trades executed on the exchanges and when they showed up for us. The value is the dollar amount of the trade. Ticker, self-explanatory. Spot, if you're not sure what spot price means, that's where the underlying is trading at the time these trades took place. So GM here was trading at $48.91 when they bought these $49 calls. So spot price is just the price the underlying is at when these trades executed. You have the strike of the contract, you have put or call, the expiration of the contract, and then this is telling us where the contract's filled. This is going to show us whether it's on the bid, on the ask, above the ask, below the bid, or if it filled between the spread. The type here is going to show us sweeps or blocks, and I'll explain what those are in a second. The price is the price the contract filled at. The size is the size of the trade, so how many contracts did they buy? Now, we have a SIG score here, which is a significant score, so that's giving us an indication of how strong or weak we feel that that trade might be. Then we have the delta of the contracts. We have the volume. We have the OI, the IV. This is whether the contracts are in the money or out of the money. So how far out of the money are they? The sentiment, whether it's bullish, bearish, or neutral. The percent return. So once these trades come in, the computer starts logging how they're doing. And then we have earnings data here. So a lot of times I like flow and then I'll come over here and say, ooh, their earnings are coming up. So that's not a trade I'm going to take. So really important to watch that earnings column there. Now up here we have some quick filters. So what you can do with these is say you only want to see ask side trades. You can click on that and you're only going to get ask side trades. So that's how you can kind of filter down the information to see what you want to see specifically. Now, if you're new to options flow, I do recommend that you leave the filters the way they are. So the default setting is pretty much going to show you everything. It even shows you ETFs. Now, when I'm trading, I basically just watch the stocks only. So I keep the stocks only on for the filter. And then over here, if you click on this button here, we have more filters. So you can change the display of the scanner to show you more specific type of information. So again, I do recommend using the default filters. Once you're comfortable trading like that, then you can use the filters in a more specific way to kind of dial into just the type of information that you want to see. But it's easier to see something that stands out if you see the stuff that doesn't stand out. So I want to see all of the information coming through the scanner. I want to see everything that's traded on the market. And then when I get a feel for how things look for the day, when something is extraordinary, when it stands out from everything else that looks normal, that's going to capture my attention so much more. So for me, it's actually easier to see something that stands out if you watch all of the information rather than filter it down. So there's a good deal of information here. If it's earnings season, the cool thing about this scanner is you can take this column and you can move it over. So you can adjust the columns on the scanner to make it however you want to see it. I've got it in the order that I like it. This is how I scan and read out. So I'm watching obviously in time order here. I want to see the newest stuff coming in first. So then I'm watching the value in the ticker column. And I want to see, is this a good amount for this ticker? 24,000 I'm going to ignore. 13,000 I'm going to ignore. So as it's coming through live, I'm scanning this column for high dollar amounts, and then is it a high dollar amount for that specific ticker? So 108,000 stands out here because most of this is less than 100,000. So you might see 108,000 and think it stands out. But then for NVIDIA, $108,000 for NVIDIA is not really that big of a trade. So I'm really scanning these first two columns here. But the way I read out the flow is going to be they're trading $178,800 of GLD. GLD was trading at 251.26 when they bought the 252 calls expiring on 12/20. These were ask side sweeps. They paid $7.15 for 250 contracts. So that's how I read out the flow, and that's why it's in the default order there. And there's a lot of secondary information over here that will also help us determine whether or not we want to follow that trade. Okay, so let's take a look at what sweeps and blocks actually are. A sweep is an order that's basically a large order broken into smaller orders to take advantage of the best available prices. So this order is filled immediately. It's buying or selling all the available contracts at the current best price, and then moving on to the next amount of contracts available at the next best price. And this is going to continue until the entire order is filled. So sweeps are more of an urgent trade than a block trade. So a block is a large order filled on a single exchange. So sometimes a block order will help an institution minimize the effect of price volatility if they were to otherwise buy or sell a large amount of contracts. So a block trade means all of the contracts were being offered for sale or to buy at a single exchange. Blocks don't quite have the urgency that sweeps. So coming up, you're going to hear me talk about urgency. So we definitely like sweeps over blocks. We don't ignore all of the blocks, but we definitely prefer to see the sweeps in our flow trading. So as pointed out, these are the fills of each trade here. So we can have above the ask, mid, bid, or below the bid. And this is just telling us where in the spread these trades have filled. So our scanner is set to show you all of these by default, as I think it's important to really see how a specific contract is being traded. You can use the filters to change what shows up if you're looking for something specific, but I really want to see how a contract is being traded from start to finish to determine if I'm going to follow it. So to understand this better, every options contract has a bid and an ask. If you're buying, you're going to fill on the ask side. If you're selling, you're going to fill on the bid side. Now, this isn't always 100% the rule, but it's the vast majority. The opposite situation, while it's rare, it does happen, so we want to be aware of the overall look and feel for the flow. Now, above the ask and below the bid are the more aggressive versions of buying and selling. So for above the ask and below the bid, you can think of it like someone saying, I don't care where you fill me, just get me in and get me in now. Or get me out and get me out now. So with above the ask and below the bid, the emphasis isn't on the price that it's being filled at, it's on the speed at which it's getting filled at. So the above the ask and the below the bid are going to be more important trades in the sense that there's more urgency involved. So using the info we just learned, it's important to note that you can't just pile into a call position because you see calls on the screen. If those calls are filling bid side, they have a bearish sentiment. So this is what it's going to look like on the screen. They're going to be calls, but it's going to show bid side. Now, if someone's closing a call position, they might not be bearish yet, but they do feel that the upside is limited or they wouldn't be closing out the position, right? So if they think there's more room to the upside, you wouldn't close out the position. But if you think the amount of room to the upside is kind of limited compared to how much risk it would take to reverse, that's when you're going to close a position. So when you see calls on the bid like this, it doesn't necessarily mean the trader thinks they're bearish. It could just mean they think the upside move that's potentially going to come is not worth the risk of a downside move of a reversal. So if someone's writing a call position, that's definitely bearish. So in either of those scenarios, this is what it's going to look like on the screen. We're going to see calls coming through the scanner filled on the bid, and these are not bullish call positions. So the same is true for puts. Puts coming through the scanner that are filling on the bid side are not bearish positions. Think of it like someone's in a put position, but they're closing it out. That would mean they think the further downside is limited, or if they're writing a put position, they want the trade to go up. They want the underlying to go up. So if you're writing a put position, that's a bullish stance, and this is what it's going to look like on the screen. You're going to see puts coming through on the bid. So by using the bid and the ask, we can also see when these traders are exiting their positions. So that's especially important if you followed a big money trader into a trade. You should want to know when they exit as well. Now, I don't exit my personal position when I see them exit, but I definitely want to know when they do. So if the reason I'm in a trade is based on their entry, I do want to monitor when they exit the trade. So what we can see here is this bottom line of flow. It's an ask side sweep for 1,000 contracts. That's the opening transaction. We know that because it's an ask side sweep. Now the top line of flow came in 4 hours later as a bid side sweep. And if you look at the size, it's 992. So it's almost the same size here. So this is going to be the opening transaction at 17 cents for 1,000 contracts, ask side sweep. And then we see the bid side sweep come in behind it for 22 cents for 992 contracts. Now we can't guarantee this is the same trader, but likely this is the opening position here for 17,000. And 4 hours later, a closing position for 21,800. So that's a $4,800 gain, which equates in this case to 28% for a 4-hour hold. So what we're going to see here is an ask side transaction, and then that same contract is going to flip to bid side. And it's going to be about the same contracts. Now maybe they split this up into two trades and they close 500 at a time and then 500 a second time. So it doesn't have to look exactly like this where it's one trade in, one trade out. But this is what you guys are going to see when it's a buyer exiting a position. The ask side transaction for the same contract is now going to come through bid side. Now in the size column, there's 3 colors over here. We've got white, purple, and green. That's significant because that's telling us something important. And what this is telling us is where the volume on these contracts is in relation to open interest. So when the size column shows white like this, that just means that the total volume on this contract today has not exceeded the open interest. When it's purple like this, that means that the volume on this contract today has exceeded the open interest. And when it's green like this one, that means the size of this single trade by itself has exceeded the open interest. So what we really want to see when we isolate a contract is the size column turning from white to purple or white to green or even a mix of purple and green. If we have 8 lines of flow and the size column is all white, it might look like a lot of flow, but it wouldn't necessarily command my attention yet. So think of what this means in a practical sense. If the volume of today hasn't exceeded the OI, okay, the volume for today hasn't exceeded the OI, that just means there hasn't been a lot of activity in the name relative to the activity in the past. Now, if the volume column is purple, that's showing us that the volume today has exceeded the OI. So in this case, there's an increase in the activity of that contract. If the volume column is green, that's a pretty big deal. So that means that in a single trade, someone traded more than the entire amount of contracts that were even open at the start of the day. So that's something that's going to capture my attention pretty quick, especially when combined with the other pieces of the puzzle that I look for. So the size column, you want to pay attention to what color those are coming through at. Now, using the 2 previous pieces of information we've learned, the ask and the bid and the color in the size column, we'll sometimes be able to see when a written position comes through. This is a sell to open. Now, if we take a look at this example here, there's a few things we need to look at to determine this. The first one is that this is a sweep below the bid. So that's telling us that this is either a closing position or someone writing a new position. We don't know which one it is, but in this case, it's going to be one of those 2 things. So now we're going to look at the volume in the OI. So the OI is 782. The volume of this particular trade was 4,000. So this can't be someone closing a previously open position because you can't close 4,000 contracts if there's only 782 currently open. So if we look at the volume for the day is 4,068. So that means this is guaranteed a written position, because if they opened 4,000 in the morning and then came back to close 4,000, we wouldn't be able to say this is guaranteed a written position. but the volume in this case is 4,068. So the only volume outside of this particular trade was 68 more contracts. So there's no way this could have been opened earlier in the day and then closed later in the day. So this, because I can see that it's a below the bid sweep, and because the size is greater than the OI, this is a written position, which is a sell to open. Now, most of the flow you're going to see on the scanner at any given moment looks like what you see on the screen here. It's all different tickers, it's a mix of calls and puts, it's low dollar amounts, random expirations. There's just no consistency on this screen. Most of what you're going to see throughout the day is garbage, just like what you see here. And then you're going to ask, well, if it's garbage, why do we need to see it? So without being able to see what's regular, average looking flow, we won't be able to spot what's above average. So also this regular looking flow that's pretty much garbage at any given point can turn into the right looking flow. It might be flow that we want to follow, but to see that, we have to know how they went into a contract in its entirety. So while this may be boring to look at now, with repeated activity, this boring flow may be laying the groundwork for what we will eventually follow. So where people get into trouble flow trading, and I'd say the number one problem of unsuccessful flow traders, is that they're following this normal, boring flow. They aren't patiently waiting through all this to get to the good stuff. And patience to wait for the right looking flow is the key to making this a successful strategy. Too many people, and I get too many messages saying, hey, I followed this flow, it didn't work out, can you tell me why? And then when I pull up the flow, it's just garbage looking flow. So you really want to sit and watch what's coming through on a regular basis and get a feel for how the options market is moving for the day. And then when something extraordinary comes through, it's going to stand out. So what we want to do is sit and wait patiently for flow to come through that's showing size, time, and urgency. Okay, so this is the phrase we coined early on when we were doing extensive research into what flows seemed to work out much better than others. We put countless hours, hundreds of hours, thousands of hours into just staring at this flow, trying to figure out the best looking flow, what typically works, what typically doesn't. And the overall idea is size, time, and urgency. So for size, I like to see a decent dollar amount committed to the trade. Okay, so that tells me this is a big money trader or a hedge fund trader, not retail. I don't care if someone's trading $20,000 of Apple. I don't care if someone's trading $100,000 of Apple. That's not the type of person that I want to follow. Now, it doesn't mean that person doesn't know what they're doing. It doesn't mean that person isn't a great trader. It's just not the type of person I'm using options flow to follow. I want to see the hedge funds. I want to see the big money traders who are putting a lot of money on the line, because those are the guys that have the ability to move the markets. Those are the guys that have the research teams to find information on a company that you and I just don't have access to. And when they're confident in a trade, they're going to put a sizable amount of money behind it. So the first criteria, I want to see some good size coming into these contracts. Now for time, the more time on the contracts, the more you can absorb a day or two moving against you. So it's going to be a much safer trade. So something expiring in a week is going to be riskier than something expiring in a month. And that's going to be riskier than something expiring in 6 months. Because if it only expires in a week and you have 2 red days and you're in a bullish position, well, you now only have 3 days for it to come back. If you're in something expiring in 6 weeks and you have 2 red days, well, now you have plenty of time for it to absorb that and come back and make a profit. So we've generally seen that when it comes to the time on the contracts, the really successful long-term swings are going to be time. They're giving themselves time for the trade to work out. Now for urgency, how urgent are they trying to open these positions? If they're desperately trying to get into a position, we've got to ask ourselves why. Now, we won't know why, but the idea behind it is, why do they want this position open as quickly as possible? And we won't know the answer to that, but what we do know is that for some reason, they are urgently trying to open this position. And that's a good trade to follow. Now, it doesn't mean it's always going to work out, but that's the type of trade we want to follow. When there's a good amount of size going into the trade, there's a lot of time to allow for it to work out, and they're urgently trying to open that position. So always remind yourself size, time, and urgency. When analyzing the flow, though, it's important to use these two specific functions. So sometimes, as with JetBlue last week, we'll see a theme in a sector. So while the JetBlue flow looked nice, we also saw some quality flow in DAL, AAL, UAL. So that whole sector was seeing similar type looking flow. So when we want to evaluate a specific ticker, what I want you guys to do is start by isolating that ticker. So I want you to look at all the flow coming into that ticker. And by isolating that ticker, you can get a feel for everything happening with that name. So while there might be a great call position being opened, if you don't look at the entire name, you might miss that a big put position was also opened. Now, on the checklist, I'm going to show you that we want to see the big money trader is hitting a specific contract. So that means they have a specific trade thesis in mind. Hitting multiple contacts within a ticker, that can be a good sign, but a great sign is when they go after a very specific strike and a very specific expiration. So to see that, we want to isolate this specific contract that catches our attention. Okay, so we look at a ticker, there's something interesting there. We start here, and then I want to isolate the contract to see how they're hitting that specific contract. So when you want to isolate the specific contract, what you're looking at there is how is this trader positioning themselves? And watching how they hit a specific contract is going to give us clues as to how aggressive they're opening the position. So whether they're hitting a specific contract and how they're doing it, that's all going to determine whether or not this is a high probability trade. And I'm going to show you that on the checklist coming up. But those are key factors. Is it's not just that you see a dollar amount going into a ticker. It's going into a very specific ticker and going into that specific ticker in a specific manner. That's what makes it a high probability trade. Here's another tool we have on the scanner that can help you keep track of the bigger trading days in a specific contract. So if you click on the ticker name, you're going to get this pop-up box, and down here we have the options chart. So this is showing us the price history of the contract as well as historical volume and OI. Now we can use this to get a feel for whether these contracts are primarily being day traded or held open as a swing. And this can be a quick way to spot whether the original trader, if we're following them, is still in the position or if they have it closed out. And in the top right corner, you can change the time frame of that data. But what we're going to do here is look at this information to see, is the volume and the OI comparative, or is the volume super high and the OI is barely increasing, which would kind of hint to us that these are day traded contracts. So if you're in a ticker or a specific contract, you can pull up this chart here and get a very quick visual representation of whether or not the big money stayed in or where they might have closed out. In case you missed the flow, you can use this to get a really quick look at where they might have closed out. So another tool to help determine if you might want to stay in a position is the net premium. This is the net call premium and net put premium in options. And what this is showing us is the total amount of money spent on buying and selling calls and puts. So if you see the net call premium climbing, it's just showing us that there's more money being spent on buying these calls. So that can be a bullish sentiment. And same for puts. If you see more put premium, that's basically saying they're putting more money on buying puts, which is going to be a bearish sentiment. So you can get an overall feel for the ticker that you're looking at using this tool here. So these are just some things that we have to help support the options flow that you're looking at. Now, by default, your filter settings are set to show you almost everything. Okay, like I said before, I kind of want you guys getting familiar with seeing everything and then being able to determine what looks normal. And that way, when something doesn't look normal, it's going to stand out much more for you. So over here, we have some quick filters, and by default, these are all off. So you can use these to quickly fine-tune the data you want to see, and if you hover over the name, you'll get a description of what the filter is showing you. Then we have this side panel here. This sidebar, it's this little button here. If you click on that, this whole panel comes out, and that's where you're going to see some multi-leg trades. That's where you can also fine-tune the scanner's details. So you can filter by value, contract price, number of contracts. So again, you can fine tune the scanner to show you just what you want it to see. So there are filters to make it easier for you if you just want to see a specific type of options contract. Now we do have multi-leg trades, although by default you will not see them. So you can go to this sidebar panel over here, and when the sidebar expands, over here you have multi-leg. So by default it's off, but you can go to that sidebar panel and turn them on if you're familiar with them, if you understand what multi-leg trades are really intended to do. So down here we have an example. This is a multi-leg trade. So in this case, they're buying the 80 calls and selling the 90 calls. So if you're familiar with multi-trades, a lot of times you might hear something on social media and say, oh, I looked for it on the scanner and I didn't see it. Well, you can come over here to the sidebar panel, click on multi-leg, and that's usually where some of those trades are going to end up. Because our scanner shows a lot of data, more than most of the other scanners out there. I guess probably more than almost all of the scanners out there, because I've got this really set to show me exactly what I want to see, so I'm not filtering a whole lot out. And finally, what everyone's waiting for, let's go to the high probability flow checklist. So when we're looking at flow, always remember size, time, and urgency. Now, aggressive buying can look different for different contracts. $400,000 into one contract that expires in 3 days is a more aggressive trade than $1 million in a contract that expires in a year. And also, $400,000 in one ticker may be way more aggressive than $400,000 in another. Like I said before, let's use the example of Tesla. $400,000 in Tesla is not that big of a trade. You see that all day long. But $400,000 in something like the JetBlue trade that we had, that's going to be a decent sized trade. So it's not a dollar amount. It's size, time, and urgency relative to those contracts. So let's take a look at what we're looking at here. Aggressive buying. We want to see them hit a contract in like a 2 or 3 minute window, just attacking it. Boom, 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 boom. You see 3, 4, 5, 6 lines of flow in a small amount of time. So that's going to be aggressive buying. We want to see the same strike, same expiration. So sometimes you'll see a lot of flow on a name, but it's all different contracts. That can be a good sentiment, but when they hit the same strike and same expiration, they're going after a very specific trade thesis. That's when we see that those trades tend to work out much better and much more often than the ones that don't have that feature to them. So same strike, same expiration. Contract price increasing. So that's a big one here. And what I mean by that is, let's say there's 12 lines of flow and the contract goes from something like $1.20 to $1.23 to $1.29, $1.35, $1.40, $1.48, right? So each time they hit that contract, the price is being driven up. That's a good sign, because as the contract is getting more expensive to buy, they're still buying it. So if they're willing to pay a higher price to keep getting filled and build a larger position, that's a good sign. We want ask and above ask. We want sweeps. That's showing us more of the urgency factor. No solo blocks. No solo blocks is an important one. This is a single line of data that's coming through as a block. Just a single line of data. So sometimes that can hide information from us. So I'm going to ignore those every single time. I don't care if it's $40 million in flow. I don't care if it's $80 million. If it's a single line of flow and it happens to be a block, that's an auto ignore for me. Now, if there are sweeps and blocks mixed together, those blocks become important information, and that's a block that I'm going to have to process. But a block by itself, I just don't care how big the dollar amount is, I'm not acting upon it. I need to see sweeps mixed in there to give me more clues as to what the block trade might really be doing. And then down here, significant dollar amount. Now, that's a big one, and people always ask what dollar amount I'm looking for. Now, the bad news is there really isn't an answer to that. So again, if I saw $400,000 in the JetBlue contract, that would be significant. But if I saw $400,000 in Tesla, that just wouldn't be significant. So significant dollar amount refers to what would be unusual for that specific ticker name. And with seat time, I promise you guys, as you see flow coming through the scanner live, you'll very easily know if it meets this criteria. So at first it looks like a daunting checklist, okay? But after some time using it, this becomes so automatic for you that you won't even go point by point. You'll just see the flow and instantly recognize that it's either something you want to follow or something you want to pass on. And there's no shortcut, unfortunately, it's just seat time. You've got to put in the time, you've got to see the scanner in action, and you've got to get a feel for what's normal. And then you're going to get a feel for what isn't normal. And those are the trades we want to pounce on. And that's the flow class. It's a lot to take in. I know some people who have taken this class live with me every week for months, so don't feel bad if you can't remember it all in one sitting. You have this video as a reference, so you can always reach out to me as well. On the screen, again, those are all the ways you can get in touch with me. So if I can help your options flow trading journey in any way, please don't hesitate to ask. And this goes for anyone, whether or not you use the same scanner as me. If you have options flow trading questions, please, by all means, feel free to reach out. And if you would like to join our group and use the scanner that I've shown here, you can visit bullflow.io and get a free week trial to see if this scanner helps and maybe find some great trades. So that's also going to give you access to our Discord group where I'm live in the chat room from bell to bell every day. And there I'm talking through the flow that I see and like, maybe explaining why I might not like some flow. And we also cover some technical analysis there as well. So there's something to look at when the flow isn't as strong as we would like it to see. I'm going to trade technicals. I'm going to trade options flow. So I'm always looking to put something in the Discord room that we can act upon at all times. Now, if you want to try us out, you'll get a free week to do so. But at checkout, you can also use code BULLFLOW25 for 25% off your first month. That's our treat to you for sitting through this flow class and showing an interest in learning how to successfully add unusual options flow to your overall trading strategy. And I do feel like unusual options flow is a great addition to any trading strategy. We're watching the hedge funds and we're just following what they're doing. Now, it doesn't mean they're always right, but historically speaking, statistically speaking, there's a lot of great trades we find from options flow that we wouldn't have found without it. So if you want to join us, bullflow.io, use code bullflow25 for 25% off your first month. And thank you guys for watching and hanging out with me today.